Good morning, everyone. Welcome to Daily Rates Live with the Mortgage Calculator. Give us just a few moments here to go live on all the different platforms. Today, we're going to be going through our live rates and then doing a deep dive into HELOCs, which is a great topic here. All right. Looks like we're live on all the platforms, so we'll go ahead and get it started. What we'll do is we'll take the chat off the screen for now, but go ahead and keep dropping comments there in the chat. You can also drop any questions you have in the chat as we go through our presentation, and we would be more than happy to answer them. All right, so welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our CSO, Jose Gonzalez. We are a lender that specializes in non-QM loans. And what we do every morning at 11 a.m. Eastern on this show is go through our live mortgage rates, and then we do a deep dive into a different loan topic. Today's loan topic is going to be HELOC. So yesterday we talked about HELoan second mortgages, and today we're going to be talking about HELOCs. So Jose will get into that shortly and the difference between the two. But first, let's check out our rates for the day. So Nick, if you're ready, let's go ahead and pull up the rates.
All right. So we will check out the rates for today. It is October 11th, just after 11 a.m. Eastern. So all of our standard programs have their initial rate sheets for the day. And we will compare across the programs. If you'd like a full breakdown and itemized loan estimate that itemizes all the fees that go into the APR, please get with our team members. They'd be happy to send that over. For the demo today, as we do every day, we'll set up a basic scenario, a single-family home, 500,000 purchase, 400,000 loan amount. That corresponds to 80% loan to value, 20% down payment. And we use an estimated 760 FICO credit score and an estimated 40% debt to income ratio. So let me go ahead and share my screen. And we'll check the rate for today. So first up is our 30-year fixed conventional for a primary home, the most common option people think of when they think of a mortgage. Rates today coming in at 6.124, final APR 6.427. And if for any reason our customer doesn't qualify for a conventional option, we typically want to quote an FHA option to compare. FHA allows more leniency on credit issues and a higher overall debt to income ratio, but it does have upfront and yearly mortgage insurance. FHA comes in today 5.25. Final APR with all the costs and mortgage insurance, 6.217. So when we compare across both, if our customer qualifies for both, they could consider FHA, but they need to keep in mind the mortgage insurance because it could be a touch cheaper. And our customers that need to use it, definitely a great option, very comparable. And our VA options are only for eligible vets and active service members. If you are eligible, these programs are amazing. Rates as low as 5.5. Final APR with a standard funding fee, 5.810. And if we're comparing across the programs, the VA is obviously going to be the best for our eligible borrowers. So definitely take advantage. And moving down to the final standard option here, USDA programs are only for USDA eligible areas. That's the rural areas of the country. If the property is in one of those areas and the borrower qualifies, these are great options to compare. USDA comes in today 5.5 rate, final APR 6.218. Actually almost identical to FHA today. Typically USDA is a touch cheaper. It is a touch cheaper than conventional. So those looking in those areas, definitely keep USDA in mind. And that rounds out our standard options that any bank or lender would have. But if our customer doesn't qualify, unfortunately, many banks have to deny them. But we have 5,000 other options, starting with our non-QM alt doc for our primary home. So if our customer doesn't qualify with conventional options using tax returns, etc., or FHA options using tax returns, etc., needs to switch to alternative docs such as bank statements, 1099s, P&L statements, etc. Rates today for bank statement and similar come in at 6.25, final APR 6.553, just a touch above conventional to switch to alt docs. So absolutely amazing for our borrowers that need to use it. And we can still get them that home they really want. And our investment properties have tons of options. So first up is our non-QM option. So again, bank statement or similar, coming in at 6.99 for an investment property. Final APR 7.327. And we'll compare that to our other investment options. We don't have any government programs, so no USDA, FHA, or VA. but we do have conventional. Coming in today, 6.875, final APR 7.211, which is cheaper than our alt doc, but not cheaper than our favorite loans, our DSCR options. DSCR doesn't need any income or employment info. Simply use estimated rents from the appraisal to determine a DSCR value. The estimated rents can cover the estimated expenses. That is a positive DSCR ratio over 1.0, aka the property cash flows. Those are preferred. This option here is with a 3-year prepayment penalty, which is pretty standard. Rates come in today 6.375, final APR 6.707, beating conventional. That's pretty awesome. And we can add a 5-year prepayment to sweeten the deal a little bit. Rates as low as 6.25, final APR 6.578. And we do have a no prepayment penalty option coming in today at 7%, final APR 7.311. Just a touch above conventional. So I'd still say pretty much 100% of investors would prefer a DSCR to conventional. And if we can add a prepayment penalty, definitely makes it even better. Excuse me. And our final 2 options today are second mortgages fixed. Our topic for today is our HELOC second mortgages. These are going to be our fixed second mortgages, which are new. So alternative to a HELOC for a primary home, for our borrowers that want to keep their first mortgage in place and get cash out with a second mortgage using our fixed rate second mortgage. Rates as low as 8% today, final APR 8.370. And we can use the same option for investment properties, which are very rare for HELOCs. Hopefully Jose has an option later today though. And the investment properties can get cash out as low as 9.375, final APR 9.731. So those are our standard options that we go over, but let's get into today's topic. We don't do a live demo for HELOC because they're a little bit tricky there. So Jose will pull up some actual live rates for HELOCs and first talk about the difference. Remember yesterday we did our fixed rate second mortgages, which we do our live demo on, but we also went in detail. And today Jose will compare those to our HELOC options. So let's check it out, Jose.
Good morning, everyone. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator. Yesterday's topic were the HE loans, home equity loans, second mortgages, closed end mortgage, right? Fixed amortization on that. When you close, the full loan amount disperses. That's another difference versus the HELOC, which is an open-ended mortgage, right? You pay on what you owe. You have an option of how much you want to draw at the closing of the HELOC. You may not need, let's say you got a HELOC for $240,000, but you don't need the full amount at closing. You need maybe 120 grand. So you draw that amount at closing and get the rest of the amount as you need it. So you can have a different draw amount versus the HE loan. It's a open-ended mortgage, so you only pay interest on what you owe. As you bring the balance down, the interest expense will go down as well, versus the HE loan, which is again a fixed amortization, full amount dispersed at closing, and a fixed payment throughout the life of the loan. So let's go ahead and share our HELOC options with you today. Our first option here is at our maximum CLTV. We, until recently, were able to attain 95% CLTV on the HELOCs, but they were reduced a couple of months ago to 90%. And the maximum CLTV is on a primary residence. In this scenario here, this HELOC is fixed rate. So we do have fixed rate HELOCs and variable rate HELOCs. And the examples I'm sharing with you today are with a 3-year draw period. That is the time frame during which you can draw money from the HELOC, and that's also the time period during which it is interest only. After the draw period ends, the loan does transition to a fully amortizing loan, and if you already had 3 years elapsed, it would be a fully amortizing 27-year loan. So here, this example, we are at the maximum CLTV of 90%. We have a $240,000 HELOC, $300,000 first mortgage, and we are on $600,000 value. 10.7% is our cost at par. And these are all borrower paid prices on the HELOC. This is not lender paid pricing, just let you know that. So 10.7% is at par with a broker fee of 6,600, 2.75%. Now our investment cash out HELOC, maximum 80% CLTV. Really great rates here. 10.45% is the rate on this HELOC at the maximum 80% CLTV with no additional buy down fee at that rate. And then for our lower credit score borrowers, this is with a 660 credit score, maximum 70% CLTV at a 660 credit score, and you're looking at an 11.9% interest rate at par. And now let me give you some variable rate HELOCs. Right now, the variable rate HELOCs do track with the prime rate. The prime rate is the index. Now the prime rate recently just had a 0.5% drop, so these HELOCs had a 0.5% drop in their rates. The margin, the fully indexed rate, is going to be based on the index plus a margin. The margin is going to depend on the credit score of the borrower and the CLTV. So in this case, we're at the maximum CLTV, but you do see that the rate is a little bit lower than the fixed rate. I'll just go over the fixed rate a minute so you can remember. It's 10.7% was the fixed rate versus the variable rate, which is 10.4% with no discount points at that rate. 90% CLTV primary. So now investment option here, variable rate, 3-year draw again, 80% CLTV. And our rate on this one is 10.25 at par for our investment cash out at the maximum CLTV. And our last option here for our low credit score borrowers is the investment option at a 70% CLTV with a 660 credit score. And the rate we're looking at is 11.375%. Please do remember that the HELOCs are also a good option if you are looking to do a combination loan, first mortgage and HELOC, to not have to pay mortgage insurance, for example, or for your limited review condo loans for Florida, where the association does not have reserves. You can go 75% on the first, 15% HELOC, and 10% down. So look to the mortgage calculator for all your HELOC needs.
All right. Thank you, Jose. Let's see. Looks like we have a question here. Given the draw is 3 years interest only, how is the qualifying payment calculated? 27 years?
Qualifying payment is calculated over a 30-year amortization, fully indexed.
And fully drawn, usually the fully drawn line. Yes.
Absolutely.
All right. Thank you for the question. I don't see any others, so I think we'll go ahead and wrap it up. But definitely great. And if you didn't catch the HELOC training yesterday, make sure to go check that out so you can see the difference of both the HELOCs and the HELOCs. So thank you everybody for tuning in. Remember that we do this every weekday at 11 a.m. Eastern, where we go through our live rates and then do a deep dive into a different loan type. So we will see you next week. Actually, Monday is a holiday, so the next time we'll see everybody will be Tuesday, 11 a.m. Eastern, for the next episode, a daily